Hi and welcome. I am Kola, co-founder of Sublime Trading. We specialize in helping high salary earners and CEOs get consistent returns in the stock market using a simple trend following strategy in just 60 minutes a week. Hi and welcome to this live stream. This is the first live stream I've put up since before Christmas. If you do look in our profile, you would notice that there's a live stream from Zahir today. So have a look at that and see how the stock market is stacking up. So in today's live stream, I'm going to cover the US dollar, Japanese yen. We might have a look at one other currency pair and the dollar index as well. But right now, the US dollar Japanese yen is looking interesting because it could be setting up for a buy opportunity or a sell opportunity. So I'm going to go through this right now and present to you both the buying and selling opportunities. So let's have a look at the chart. We're going to look at the trading view setup page. So we have the monthly time frame in the top left hand corner. So this is followed by the weekly time frame in the top right hand corner and the daily time frame stretched here along the bottom. And you would notice that there's trend filter colors on both the weekly and the daily. These are based on moving averages. So the green candles, very simple. The green candles indicate bullish moves. The red candles, consistent red candles, indicate bearish moves, and grey candles indicate areas of consolidation and deep declines against the trend. So, as mentioned in the title, we could be looking at buying opportunity or selling opportunity. So first of all, let's look at the buying opportunity. So on the monthly time frame, we can see there's a bearish candle for December in play, and this is following on from the bearish move we saw back in November when price hit the 150 round number. So price started to decline here and moved to the downside. And if I go down to the weekly time frame, here we can see the potential buying opportunity. So we've had a deep decline. The bars were previously green, then they turned to grey, and then we had a mixture of red and grey candles. And what we can see here is price has now come down to the 50 simple moving average on the weekly time frame. So this is a strong level of support. So in a bull trend, we want to see price bounce off the 20 and 50 simple moving averages, and vice versa in a downtrend. So in a downtrend, price will be below both the 20 and 50, and as price pulls back, it will pull up to the 20 or 50, use it as resistance until we see the next decline. So here in this case, price has had a nice run. So from March 2021, price broke above the 200 simple moving average, started to trend really nicely, and then hit 150 round number, and then started to pull back. So it's now come to this moving average. Last week's candle, there's a long wick below the candle, so it just started off by trading below the 50 simple moving average. But before the week ended, the buyers were able to close price above the 50. So that's important. When we see price close above major support levels in an uptrend, it indicates potential further strength to the upside. This week's candle, we're seeing this reversal candle in play at the moment. So the body of the candle is becoming smaller, less volatility. That may also be due to the Christmas period, so less traders at their desks or less trading activity. But price is slowing down above the 50 simple moving average. So we might be anticipating a bounce from this area of support. If so, if this area does continue to hold, then as mentioned, we should see a resumption of this previous bullish move. So we should see price continue to move up above the 150 round number, and then above this recent high from October 17th at 151.92. So this is our potential buying opportunity here. So if price bounces off support, we should see a move to the upside. But what's interesting is when we go down to the daily time frame, what we can see here is consistent red candles, and also prices below all three moving averages. The blue line is the 20 simple moving average, the 50 simple moving average, the orange line, and the 200 simple moving average, the black line. And from this move from this high in on October 21st, price has been forming this consistent pattern of lower lows and also lower highs. So this indicates bearishness right now. And the fact that price is also below the 200 simple moving average indicates that the bias is to the downside. So if we look at the weekly is at a strong support level and appears to be holding. But the daily is looking bearish and appears to be pulling back and setting up for the next move to the downside. So which direction will price head next? We can't guess where price will head next. We have to have our criteria that will validate and invalidate a potential move to the upside or the downside. So what would invalidate a continuation to the downside would be a change in this pattern. So at the moment, as mentioned, lower lows and lower highs are in play. So if we start to see a change in this pattern, so higher highs and higher lows, then that would invalidate this asset from continuing to decline. And so the first thing would be a move to the upside, which is currently in play. A pullback. So if this pullback doesn't pass below this low at 130.54, and let's say it pulls back above this line and then breaks above a previous high, then that will give us an indication of a continuation to the upside. But if I go back to the weekly time frame, if price breaks below the 50 simple moving average and closes below that, and also if I go back to the daily, and if we see this recent low broken, so if price breaks down below this level and closes below this level, then that would indicate further moves to the downside. So this is why we always want to wait for have our criteria in mind and wait for those criteria to be met. We don't want to jump in too early. We are long-term investors, so we're not trying to grab 10, 20 pips. We want to grab 100, if not thousands of pips in a move, and we do that by compounding. So we will add more positions as we go along. So we want to wait for criteria to be met. Yes, we may miss out on a few pips and points, but when our criteria are met, we usually are able to easily extract a lot of pips and profit from the market. So if the US dollar Japanese yen is going to continue to move down, there we want to see a break and close below 130.54. But if price is going to bounce, we want to see a change in this behavior that we're currently experiencing. So we want to see a pattern of higher highs and high lows, and also price to move above the 200 simple moving average. And that will be our indication that we can potentially take a long position. So wait for those criteria to be met and don't jump in too early, unless you are, of course, a day trader or a swing trader where you are going to attempt to extract a few pips and points from the market. I just want to overlay, what's also interesting is having a look at the dollar index. I want to overlay the dollar index on this chart so we can see what the dollar is doing. It might be this one. No. Okay, so this orange line you can see overlaid on the chart is the dollar index. So it moves similar to the US dollar Japanese yen. So if the dollar index is moving down, the US dollar Japanese yen is likely to move down. If the dollar index is moving up, US dollar Japanese yen is likely to move up as well. So if I just zoom out, we can see how correlated the dollar index is with this currency pair. So what we also can do is, if I just go to the next chart along and just remove this. This is the chart for the dollar index. So if we can see strong signs that the dollar index is going to move up or going to continue down, then that will help us with our analysis when we're looking at other forex pairs as well. So let's see what the dollar index is doing here on the monthly time frame first of all. So on the monthly, price was previously in a large area of consolidation. So if I just draw this shaded area here, so you can see from March 2015, price has been moving sideways and broke out above consolidation in June of this year and continued to move to the upside until September, and then we started to see a decline. Look where price has come down to. It's come down to this. This was major resistance previously. It's now, when price breaks out above this level and pulls back, this now becomes support. So resistance has now become support. So this is a major level of support right now, as well as the 50 simple moving average. So we have two levels around the same area. This is the weekly time frame. If I go to the daily time frame, here again, sorry, this is a monthly time frame now. Here again is that shaded area. We have what we call a monthly PIV 9 as well here, and we have the consolidation resistance, which is now support, and we have the weekly 50 simple moving average, all around the same area. So looking at the dollar index, this tells us that we are potentially likely to see a bounce to the upside. Doesn't guarantee that, but it's likely to happen. We're likely to see a bounce to the upside. But again, price may just re-enter consolidation and stay in this area for several more years. But as for now, if price does continue to hold, we anticipate a bounce. And if price does bounce for the dollar index, it's likely to bounce as well for the US dollar, Japanese yen, because they're highly correlated. So the weekly here again, as you can see, is that support level, and on the daily time frame here, it's a different picture. Prices below the 20, 50, and 200 simple moving averages, and forming a pattern of lower lows and lower highs as well. So if we can continue to see previous lows being broken, then price would likely to continue to move to the downside. So in this case, a breaking close below the December 15th low at $102 is likely to see price move further down and inside that area of consolidation shown on the monthly and weekly time frame. But if we look at the bigger picture now, the dollar index is at a major support, and if it continues to hold and it bounces, that will give us an early indication to start placing positions in the US dollar, Japanese yen. And so now we've looked at both options here for the US dollar, Japanese yen, buying or selling opportunity. We now know when we are likely to enter if price does continue to start to rise, or where we will start to enter if price starts to move further to the downside. So we're just going to stand on the sidelines until these criteria are met, and then we're going to jump in. So the last chart, if there are any questions, by the way, feel free to type them in the chat and I will have a look at them. Hi Faisal. Hi Mohammed. Sell strong, okay. Yeah, as mentioned, I'm not too sure when you sent that message in the stream, but we don't want to sell just yet. We want to wait for the criteria to meet. If you did miss what I went through, then do have a look at the replay, which will be available as soon as the live stream is finished. So now we're going to look at the pound US dollar, which is our final chart. So it's looking interesting here. Well, sort of. Price on the monthly time frame is displaying an indecision candle for December. So we had, if you recall, back in September 2022, we had a major decline in the pound US dollar. Went to new all-time lows, and here it's at what it was at 1.0348, and then we had a strong move back to the upside. So October was bullish, November was bullish. We had a strong start to December, but as you can see, the sellers have pulled price down to near where price opened for the month. So price has now come down to the open, but still inside this area of consolidation. So we still have this wide area of consolidation in play, but there may be some opportunities for trends to form within this wide area of consolidation. But there are major levels of support and resistance above price, which may make it a very bumpy ride indeed. On the weekly time frame, the trend filter is grey. We did have a few green candles because of this deep pullback against this down move. But here we can see prices come up to the 50 simple moving average. So although it's in a wide area of consolidation, prices come up to resistance in the consolidation zone. And if this continues to hold, we may start to see another decline in price, or we may just see a pullback, and then we may see price to shoot straight back up again. And on the daily time frame, the trend filter is gray. We had a few gray, red, and prior to that, some green candles. Price is just hovering around the 200 simple moving average. We may see a bounce from this support. And if so, a break and close above this recent high at 1.2447 will confirm a continuation to the upside. But this is similar to the US dollar Japanese yen. It could go either way. So we could see a continuation to the upside if price breaks above this recent high, or if we go back to the monthly, because there's an indecision candle for this month, we may see a decline in price. And also on the weekly time frame, price has hit resistance. So resistance on the weekly time frame and support on the daily time frame. We just need to wait for previous high or a previous low to be broken, and then we would know our next course of action. As for now, it's very important to know exactly when to stand aside and when to actually take action. This is the time to stand aside, unless, of course, as mentioned, you're a day trader or swing trader where you're just hoping to make a few pips along the way. So I hope this analysis was useful. Remember, we do hold positions for several weeks, months, and in stocks potentially over a year as well. So it's a different style of investing to most of you, and it does allow us to do less work and extract more profit, because once a trend does unfold, we will extract a lot of profits along the way, because the size of the moves will allow us to actually compound. So if let's say the US dollar Japanese yen is going long, we won't just buy in once, we'll buy in again and again and a few times until the trend comes to an end, and that way we're able to extract more profit than we would be able to if we were just to have one position opened in the market. So I hope you enjoyed that. Do check out our previous streams as well. We cover all markets, stocks, UK and US stocks. I've even done a recent stream on the Nifty, the Indian stock market. We cover Forex and commodities as well, and also the cryptocurrency market, because all markets are similar. Some are quite more erratic than the others, but it still follows the same formula. Okay, I'm going to have a look before I go if there's any other questions. No questions are coming through right now, so I'm just about to end the live stream. If you want to learn more about us, you can check out our profile and look out for our next live stream, which will be tomorrow. Hope you all have a great Christmas period and also have a great new year as well. And see you all on the next live stream. Take care.